official welcome to the Navigating Your Numbers workshop. We're so excited to talk about this topic with the amazing panel that we have for today. They each bring kind of a unique perspective from different corners of the financial world. Jay from our team is here. If you can wave Jay, she will be moderating the chat for us. So please drop any thoughts, any questions, takeaways in the chat, and let's make sure to make this an interactive conversation. Let us know if anything resonates. For this session particularly, let's just be real. It can be a struggle to be confident with your numbers, but hopefully after this session, you can kind of leave feeling like finances are not overwhelming, and you can be more confident when you're looking at your numbers. Before the session, we did share a little bit about the panelists. I would love to give them just a chance to maybe expand a little bit on their bios, but before they do that, because we have people from different industries and stages in their business, maybe even from different locations, we want to kind of understand where you are now. So would love to drop an icebreaker question in the chat. Please let us know in the chat your name, your company, and when it comes to your numbers, what's one thing you wish you understood better? So while the audience does that, we have Brittany Littleton with Littleton Legal, excuse me. We have Laura Lee with BMO Bank. We have Lindsay Barber with CCK Strategies. Panelists, if you can share, just a brief overview of your financial background and maybe something that wasn't covered in that bio. Laura, if we can start with you.
Sure. So I am Laura Lee. I am a bank manager with BMO Bank here in Oklahoma City. I've been in banking for about 13 years. A big thing for me is I just have a passion for making banking as simple as we can. I found that a lot of entrepreneurs or just even people in the community can think banking is scary or don't see the value in having a banking relationship. And we're really trying to change that mindset. I've seen with some of the other panelists too that I'm really aligned with the community impact also, banking the underbanked, connecting with the underserved communities to just try to bring that financial education and that financial literacy to bridge some gaps. But thank you. I'm happy to be here. I'm also going to shout out, I have a couple of my partners on. Mike McJunkins and Lydell are both on with me today. They're both business banking specialists, especially in the lending space. So I'm pretty stoked that they were able to join me today. They're going to add a lot of value to the conversation.
Thank you, Laura, and thank you to your team members for joining as well. Brittany, do you want to go next?
I'm Brittany Littleton. I own Littleton Legal. We are an estate planning and business law firm, and I am a super nerd about the intersection of estate planning and business succession planning and business law. I love working with families and individuals and entrepreneurs about how to create generational wealth and build strong legal foundations that I think build strong families, build strong businesses, and build strong communities. I'm here today speaking as somebody who advises business owners from all stages, from startup to exit, and everywhere in between, but also as an entrepreneur and business owner myself who tries to stay hyper focused on not just being a lawyer, but how to be the best business owner and employer possible too.
Thank you, Brittany. Lindsay?
I'm Lindsay Barbour, and I'm a CPA with CCK Strategies, which is a public accounting firm here in Tulsa. Kind of to add to my bio, I guess, the experiences that I've had working with both my parents and my in-laws are entrepreneurs. And so I kind of started early helping them with their businesses, like even as I was, still going through school and everything. And so really getting in touch with what entrepreneurs and founders deal with on a daily basis from more of a personal level. And then my husband and I are also entrepreneurs. And so, we're having to make a lot of these decisions for ourselves, on the day to day. And so just what are the things that I've cared about as I've walked through that journey, trying to think about that as I help to advise business owners as they're walking through some of the same things. And I'd also taught for 8 years at Tulsa Community College. So trying to just break the numbers down, because I think business owners are really good at what they do and they may not have a lot of financial background. So trying to bridge that gap.
Thank you all for being here today. I want to give chance for Jay to kind of let us know where everyone's at in the chat, if you can share some of those initial icebreaker questions. And if you haven't already, please share in the chat what you're hoping to get out of today's session.
Yes, thank you, Gabby. Hi, guys. So good to see all of you. Forgive my voice. I'm just now getting it back after being a little under the weather. But yeah, so just to give an idea of where some of our audience is at, we have Norma. Hi, Norma. So good to see you, girl. She's interested in dispersing finances, budgeting, and prioritizing where money should go. And then we have Maria Collado, Jess Kyle. She's just has a couple of questions that maybe we can go back to about how to protect her work. And then another question is how to handle taxes and operating agreement when not really making any money yet. So those are two great questions that we'll keep in mind. Mari Suchil is interested in tax planning and strategy. She says, I'm looking to learn about how to track and manage my taxes, understand tax deduction, and find ways to optimize tax situations. So I'm sure we can all can learn from that. And then Allison Anthony, who happens to be my mother and potentially is looking into buying a business. So I'm very glad she is here as well. But yeah, that's what's going on in the chat.
Well, thank you all for joining. And I see that, there's different facets. There's so many different facets that this financial talk can take. But with that, we're going to get right started on the Q&A. We want to start with just, let's start with the foundation, managing money, in the day-to-day, right? What do founders kind of need to know? So this question is for all three panelists. What's one number you think every entrepreneur should check and know regularly?
I can start because mine's going to be a pretty quick answer. Something that I would say, even when you're in the entrepreneur space, a number that's also important is your personal credit score. And that's something that we run into a lot is it's hard to just jump into business lending when you haven't had a focus on your personal credit score and how you have managed your personal finances. So that's something I wanted to call out when that's not always fine for business owners is that your personal credit score does impact it. And that's something you should keep an eye on as well to see, making sure everything looks correct, making sure there's no discrepancies in the reporting. So that's one of the first things I would call out.
Great. Thanks, Laura. Lindsay, do you want to go next?
Yeah, I mean, I think cash is king, right? So finding ways to pay attention to how much cash you have available and thinking ahead about, how you're gonna use it in a budgeting sense, I think is a really important thing for business owners to wrap their brains around.
Yes, definitely. Great call out. Brittany, you want to close out this question?
Especially if you're a new or growing business, I think looking at your financials from a trailing 12 perspective, where you're looking at the previous years, because you are probably going like this, might allow you to identify trends faster than thinking about quarterly or year-end statements. Then I'm going to break the rules and say a second one because it's so easy to get in the weeds of running your business, but paying attention to the total owner benefit, not just the wages and salary you're paying yourself for the job that you're doing for the business. And even if you're paying yourself less, then you would have to pay somebody else, being mindful of what it would cost your company to replace you, but then also your profit distributions and then the owner benefits that you get to take through the perks of being a business owner, expenses that might be pre-tax expenses that you would have to pay for after tax if you were still a W-2 employee.
Brittany, I want to stay with you for a second. I'd love to know, just from your experience, what's one money habit that really makes a big difference, even if your business is just getting off the ground?
So I come from very humble beginnings, and for me, it's really important to be mindful of my money story and how I make business decisions. One thing that helps me be more objective is following what is called the profit first model. It's basically an allocation method of as revenue comes in, putting it in certain buckets. And for me, it helps me be disciplined about how I manage my cash flow, how I make sure I'm budgeting for things like taxes and wages, and then also that that you're allocating money as it comes in the door as profit, setting that aside, and then building the rest of your budget behind the scenes from that. That's just a method that works for me to make sure I don't spend all my money as fast as it comes in.
Absolutely. Yeah, definitely different methods, but appreciate you sharing your experience. Lindsay, I'd love to learn from you too. What are some early systems or tools entrepreneurs can kind of set up to make money managing less overwhelming?
Trying to come up with ways to be paperless is always important. And there are a lot of apps out there that business owners can use to do that. Sometimes it can be, a QuickBooks type of situation is helpful. The apps are available, and QuickBooks Self-Employed is available even if you're not doing the full QBO version. But you can use that QuickBooks app for self-employed individuals to track mileage, to track receipts, and things of that nature. I love it for a lot of people are out there on the go, rather than, I don't know how many of you guys have tried to save receipts, but as they sit there in a pile, they start to fade out. You can't read them anymore. And then you're trying to look at them at the end of the year and remember what happened. And so that's where having an app like that, where you can take a picture of the receipt, code it right then and there while you're thinking about it, can be really helpful, especially because you can get into ways as your business grows where you might be tracking multiple different product lines, let's say, or multiple different locations. As your business grows, you need more detailed information, and you're going to remember more so what that is if you do it as you go. So getting into habits of that. And a lot of times your banking system would have whether that be an online bill pay option where you can keep track of things there, or sometimes they will help to categorize transactions for you. Things like using a business credit card that's set aside for that purpose that also will present to you an annual summary at the end of the year. That can be a really streamlined way when you're first starting out to track those expenses without spending a whole lot of time on it. Just trying to think through what your day-to-day practices are and create those processes. And then as you grow, you can add in some more detailed tools like a cash flow projection software that a lot of those sync with either a QuickBooks, a Xero. Those are kind of the most common ones that we see small businesses do. QuickBooks rates are kind of growing a lot lately. And so Xero can be a more affordable option. That can be a little daunting at first for people, but there are a lot of like YouTube videos and training materials out there to help you learn if you're just starting out.
Yeah, absolutely. And I think, what you said is super important too, of just kind of starting where you are. There are so many recommendations for apps or tools or things like that, but what is going to stick with you in the long term, you really have to take notice of like the habits that you have. So love that you mentioned that. Something else that you mentioned were, of course, banking systems. And we, of course, have Laura with us today, along with her amazing team. Laura, I would love to know a few ways business banking tools can help entrepreneurs kind of get organized or maybe feel more in control of their finances.
I love this question. And there's so many, I don't have time to get into all of them. The first thing I would say that can really help a business owner and entrepreneur start to feel like it makes sense and to be in control of it is my first recommendation is separating business from personal. Even if you're just getting started or you think you're a small business, your bank will still have a fit for you that you can get into a business bank account and start that business banking relationship. I think that's really critical early on. To Lindsay's point, it will help with tracking expenses, tracking your purchases, making sure what's personal is personal and what you are earning for the business and paying for your business is reflected under your business. BMO specifically has a really good online banking platform. And there's a couple different avenues you can take with it where it would really just be customized for your business, where it could be the basic online banking platform. You can do a lot. You can do almost everything that you would do coming into a branch. So taking the time to understand how you can bank differently, the different tools that are available. You can set up goals within the app. I think is really helpful all the way up to like a treasury management platform where you can add other authorized users to your online banking, and you can get into doing wires, and you can do all of that from the comfort of your office. One thing that I would say up front too, when we're talking about really owning that relationship and making it make sense, is taking the time with your banker to go through what we would call a needs assessment. Our tool specifically is called My Financial Compass. And so this is a tool that we have that really guides the conversation. This is going to help me as your banker understand, how do you get paid? How do you pay for things? What's important for you in your business? What goals do you have set? So then we can really make tailored recommendations specific to that. So you're going to be in the right accounts, and we're going to help you plan for the goals you want to achieve. Every bank is going to be a different way, but that should be a tool that your banker is using with you to make sure that they're helping you set up for success when it comes to your banking relationship. And then one more thing Lindsay mentioned, thank you. I would say also is like making sure that you are getting paid the fastest way you can get paid. And that you're paying for things in a way that makes sense. So when I talk about getting paid faster, that's a lot of times when we talk about cash flow that can hold a business back. But there's other things that you can set up. Like I was saying, different things through Treasury with ACH, or banks can help you be able to accept cards and process those through for next day funding. And then we're talking about paying for things, having something like a credit card or something set up to prepare for unexpected expenses, I think can really help ease a business owner's mind when they are needing to feel like they're in control. The last thing you want is for something to come up and you don't have a way to pay for it, or you feel unprepared. So having just another resource in place of either building up a savings or having another way to pay for things, I think is a critical tool also.
So many great tools and I think reminders for the audience today. Thank you. You mentioned, the business banking relationship, and I think that's super important to talk about. What's something that business owners often overlook when they're choosing a banking partner and really establishing that relationship?
I think up front, a business owner can overlook the pricing of the relationship, the pricing of the accounts, maybe the features that come with it. And I think even outside of the pricing, ways that they can waive those fees. A lot of times there are ways to make things free or more cost effective. And so making sure, like, if the banker tells you this is the good fit based on the balance you keep, but you need to keep that balance to waive the fee, making sure you have a plan in place to go ahead and get the money in and you're waiving that fee. And so there's little things like that, like even if your bank has a paper statement fee, making sure you're getting online statements. I would say up front, that's something we see where they're not watching the account. They kind of just set it up and they're not really using it yet. And fees are coming through because maybe they're not meeting requirements for that account. Another thing that I would say that they can overlook sometimes is all the services that a bank offers. Some of the stuff we just went over. I'll meet with business owners a lot that have maybe already gotten into contracts with like a card servicing program or a payroll program. Or a lot of things like that, where at BMO and a lot of banks too, they actually have those services in-house that they can help you with. And so giving your bank the opportunity to review that relationship and help you see different pricing before you lock into a contract, I think is really helpful, because when they come in and they want their account and I'm going over some of the other features and I see a way I can save them money, but they've already done a contract, that's tough. So I'm like, I wish I could have talked to you a few weeks ago before you signed that contract, because we can beat the pricing. Most banks are full service and they can do a lot for your business. So I would say taking the time to get to know your business banker and let them get to know you first before you start connecting with a bunch of different entities.
Yeah, absolutely. And I think, kind of like you've been saying all along, establishing that relationship, right? So that conversation, learning more about each other before just diving right in. We are going to move on to kind of our next session. So we kind of started with some of the basics, right? But I think it's important also to not just focus on like, okay, tracking numbers right now, but as a founder, really planning for what's next. Often entrepreneurs are wearing all the hats, so it can be easy to get stuck in that first part and not really talking about planning for the next part, right? So I'd love to ask you all, what's one way early stage entrepreneurs can really start thinking ahead financially, even if their business is still kind of in that early stage? Brittany, do you want to kick us off with this one?
Understanding that there's really going to be a significant difference in what your budget looks like as a newly formed bootstrap business versus an established sustainable business. When you are growing that there are things on your wish list that you can't afford to do, but really being realistic with yourself about once your business is off the ground, what the budget would look like, what your expenses should look like, and not being too short-sighted in celebrating profitability. You know, you're technically profitable if more money's coming in than money's going out. But if you are making decisions based on that and you're not taking into account expenses that you're later going to have in order for your business to be sustainable, then you might make mistakes as far as like pricing the cost of your services or your goods. And you might have a false sense of security about the health of your business and its viability. So this can be anything from how much you pay yourself. It could also be things from being able to offer employee benefits. If you know that having key employees and being able to be an attractive employer is going to be critical as you grow. Also, simple things like outsourcing services that you might do in the short term. One of the things I hung on to initially was my bookkeeping because I had the skill set to do it. But it's not a unique use of my time and talent. And so that was one of the things that I had a line item in my budget of what it would cost to outsource that as soon as I could afford to do it. And then I kind of tackled those in order of priority to me and getting them off my plate.
I totally agree with what Brittany was saying. I think a lot of business owners get in a rough habit of trying to do it all themselves. And when you are first starting, maybe you have to do that. But at some point in time, you've got to learn what your highest and best use is and how to delegate out the other responsibilities. And I think we try to start a lot of our conversations with a long-term strategy in mind. You know, like Brittany said, you can kind of build out a wish list of, for me to get to where I want to be, I'm going to need all of these things in place. And maybe I can't do them all right now, but keeping that in front of you at all times while you're making decisions so that you know that you're continuing to make those decisions that align with those long-term goals. Obviously, as you grow, casting that vision for your organization that everybody involved understands where we're headed, and then you can kind of build in those accountability systems to start monitoring, you know, some key financial indicators and say, are we on the right track? Are we moving in the right direction? And I think entity structure is another one that is really key to think about early on. Some of my clients that are just starting, they want to make all the decisions right up front. And, you know, we really like to use LLCs. We like to use partnerships at CCK. There's other entity structures that are good, but partnerships early on give you a lot of flexibility to do what you want to do as you grow. And so we oftentimes kind of put into place, again, a longer term strategy of right now, this is the structure, but we can add on layers and we can play with that as we move along to save strategically on tax strategy. And also just create that flexibility depending on who you might have involved in the business with you and what the goals of each person involved are. That's something to be thinking about early on, even if you're not making any decisions that back you into a corner.
Thank you. Laura, I wanted to jump into a different question for you. What's something business owners should be doing on a quarterly or even an annual basis to kind of stay financially healthy?
So for this one, I'm going to pivot to either Mike or Lydell.
Thank you, Laura. I'd say meet with your banker. I meet with every single customer of mine at least twice a year. Each one of those meetings have a very different scope. So one is an operational meeting. So understanding from an operational standpoint, what are your plans over the next 12 months? Where do you see your business going? Are there any verticals that you want to expand into? Do you see any consolidation? Just general conversation about your future over the immediate future. And then the second meeting is a financial meeting. So we're just talking about the performance of the company over the last 12 months or maybe the last quarter or two, and then projecting the next quarters or the next year to understand financially what your needs are. Because with those operational expectations, there may be funding mix changes. We may be expanding clientele. You may see a working capital change or an inventory turn change. And so these are things that we always like to keep up with. It's also because bankers can provide intangible benefits as well. So if there's somebody in an industry you need a connection with, I might have a client that's in that industry. And so we can make a connection there and both companies benefit. And then any other general acumen or expertise for your specific industry.
Right. So continuing that relationship, right?
Mm-hmm.
Love it. Well, I want to move on to Lindsay real quick. Let's just start with the basics. What does a CPA actually do?
You know, I think there is a lot that CPAs do. We put our hands into a lot of things because really our desire is to be that advisor, you know, kind of that relationship idea again. that whether that be connections or whatever it is that you're trying to make a decision on, that we are bringing that financial perspective to that. Of course, people think of taxes when they think of a CPA, and that is definitely one thing we do. I think there's a big difference between just plugging in numbers into a tax return and following the rules of tax law versus being really strategic and thinking ahead and making sure there's no surprises. We're paying in those estimates quarterly. You're kind of taking money out of what you make every month and putting it aside for taxes, so that when it comes to the end of the year, you're not completely shocked that you owe a bunch in tax. But that's a conversation we have throughout the year to reset expectations. Maybe your business grows in the middle of the year. We need to revise those tax estimated payments. But also, all those other considerations, entity structure, and how that's going to play into mitigating. Self-employment tax is a big one for people when they're first starting out, that they may not know how that can hit them, especially if their business is having losses early on, and then suddenly they start making money. All of a sudden, self-employment tax can show up, and they didn't see it. It can be a little sneaky. So those are the tax side of things, but we also do, outsource accounting services. Like, we can be an accounting department for people, outsource CFO, outsource controller level, whatever the need is, to just be that person that can step in and fulfill that function either on an ongoing basis or just hourly, as needed. And then, we have our assurance side. So a lot of people may not fully understand what an audit is, but especially when there's third party involved, whether that be investors or some sort of like bonding agent or bank for lending requirements, that they want not only to see the financials, but they want assurance that they are correct. And so the audit department is really going through and testing the information in the financials to make sure that it's correct and accurate. So those are usually the three main departments you see in a CPA firm. Our firm, we have a little bit more, than that. We do business valuations, we do mergers and acquisitions, consulting, and we're also branching out into more of like technology consulting.
Okay, so covering all the different aspects of, your founder life. Well, you mentioned it, taxes. We're right in the middle of it. So I very much appreciate you being available for today, even though, deadline is next week. But I'd love to kind of just ask, maybe for next year, for next season, what is something founders can start doing so that they don't feel so overwhelmed next year?
Yeah, I mean, I think it's kind of what we talked about earlier. The good record keeping is huge, to where you're just, doing something along the way to keep track of what's going on. So you're not having to do it all in, January, February, pull all that information together. Create, something, a rhythm in your life where you're doing that on a regular basis so that it's not overwhelming. Because the information, the accuracy of that information, that record keeping, is going to lead to much better tax result. When the information is super messy, it's a lot harder to see through the mud and see what's like really in front of us to make good strategic decisions. On top of that, I think, again, just paying yourself the tax first. I think as a business owner, understanding the more money you make, sometimes that means you're going to have a tax bill. And you want to mitigate that, but you also need to plan ahead for it. Setting that aside first, because that's not really your money, so that you're not accidentally spending it and then, ending up in a pickle later on.
Very important, especially around this time when you start getting those bills. I want to zoom out a little bit. And, going back to our last session where we talked about thinking like a CEO, let's talk about that bigger picture and how the financial decisions you can make today can set you up for that long-term growth and sustainability. So I'd love to ask you guys, what is, Laura and Lindsay, what is one financial decision you've seen early stage founders make that really set them up for that long-term success? Laura, from the banking side, you've seen businesses grow, and you've also, I'm sure, seen some businesses stall. Mm-hmm. What stands out to you the most about the ones that grow, even if it's steadily?
Yeah, I love this question. I'm going to ask Mike to chime in on this one. Mike, if you don't mind, will you take this question?
Absolutely. I mean, we've been talking about it now for about 30 minutes. Planning, you guys are the experts in what you do. You shouldn't be experts in the legal side, the accounting side, or the banking side. That's why you have us in place. Communication with your CPA or your attorney or your banker, they're all vitally important. So are you going to spend all your time hoping you do okay, or are you going to organize some plan to meet with Laura, with Lindsay, with Brittany to make sure you stay on track? Because I can guarantee you what Lindsay and Brittany and Laura have seen, they can all run successful businesses if they want to. That's what they do all day, every day. They're experts at it. So don't be afraid to delegate out your stuff. You guys are experts in what you do. All three of the panelists can make your life easy so you can focus on building your business. Okay. I know sometimes that costs money, but it is well worth it in the long run.
Thanks,
Thanks,
Mike.
Mike. Yeah, I think, we talked about it last session too. I think it's a question that comes up all the time is like, how do I delegate? How do I get comfortable delegating? And even if you're just starting out and it's small and maybe, hiring someone you're not at that point yet. I think some of these small tips, small habits, habits that you can start today will hopefully get you to that point where you can start delegating out, especially some of these bigger tasks, right? And going to those experts. Thank you. Lindsay, I'd love to hear from you from the financial planning side as well. A decision that you've seen founders make early on that really sets them up for success.
Well, I mean, kind of Brittany had shared earlier about doing a 12-month rolling, and I think 12-month rolling into the future is really important too. To say, where do I want to be in a year from now, and map that out. Like how much revenue is that every month? What are my expenses every month? How many customers does that revenue tie back to? In order to get that many new customers every month, how many meetings do I have to have? Like really backing into how you're going to get there. And then you put that out, in a spreadsheet or whatever it looks like to say, here's my pro forma, my budget. This is what I expect to happen this year. And then regularly looking at a budget to actual comparison. So you can see, what expenses are getting really out of control. What was a surprise? Has my income doubled and my expenses tripled? I might still not be in a great place if I've let my expense side get out of control, even if I'm increasing my income. And so just really paying attention to that and then pivoting when needed. So I thought this was what my year was going to look like, but here we are a quarter in. So for me and my husband running our business, we have quarterly meetings, with him as the owner, me as the financial advisor, and the office manager and other key staff to say, where are we at with our budget to actual? How is it going? And do we need to pivot something in our plan for this upcoming year?
Love that. So really, again, just really diving deep into your numbers, I feel like as great as the experts are, you also, as a founder, have to dive in there. You can't be overwhelmed by it. You can't be scared by it. You just have to dive in and just really get to know them, even on a granular basis, so you can really start planning for your vision, right? Your vision of where you want your company to go. Love that. Thank you both. Brittany, I want to pivot to you now, as with your experience as both an in-house counsel and COO, and now as an attorney, what does it actually look like when you step in to help a business grow, and what are they usually navigating at that point?
Well, at the earliest stages, it's really just making sure that your foundation is strong. Forming a business is so much more than registering it on the the Oklahoma Secretary of State website or whatever state you happen to be located or organized in. But you'll get a lot of advice on how you don't need anything other than that if you're asking like on a Facebook forum or something like that. But actual limited liability protection is a privilege that comes with how you operate your business and requires appropriate foundational legal documents, routine maintenance of those documents, and then reviewing and updating them as your circumstances change. You also, from a foundational standpoint, want to think about protecting your brand and your intellectual property. So do you need NDAs? Do you need confidentiality agreements or employment agreements? Is your brand trademarkable? Should it be trademarked? Like, you might want to answer that question before you spend a lot of money in building a brand and marketing materials that later you can't protect. as your business grows, it's really making sure that when you sign a contract, you understand what commitments you're making, and that if you're offering services, that you have simple agreements in place that protect you and the customer in a fair way so that it's easy to do business together. If you sign a contract that you don't understand or that's unfair, ignorance is not a legal defense. And so sometimes just taking the time to have somebody review it can be an inexpensive way to mitigate your future risk. And then speaking of risk, your attorney can also help you just manage that over time through anticipating regulatory changes that might impact your business, employment issues, creating things like strong policies and procedures, and then helping you be strategic as you grow, whether it's you're bringing on investors or partners, whether you're negotiating lines of credit. There's options when it comes to all of those. When you're building key employees, how do you retain them? How do you create equitable wages and competitive benefits? And what are the legal tools that help make that path clear? And then on the estate planning side, it's really what happens to the business if something happens to you, either short term or long term, not just in capacity, but also involuntary exits through death. So, are you thinking about the short term crisis management? Is there a succession plan in place? And how do you protect your company, your family, your partners, your employees in case something like divorce or bankruptcy happens to you? And then how do you also prepare your business for success when everything works out just fine and you get to leave voluntarily? What's your exit plan? And how do you maximize the legacy that you're building?
So much to cover, and I know a lot of like big questions to ask yourself, but it's important to ask yourself those questions, right? We just have one last question, and then I would love for, once we're done with that question, for someone to raise their hand or unmute themselves, and we will start the audience Q&A portion. But Brittany, I'd love to know, what mindset shift do you think is most important for founders who really want to grow and really build a lasting company?
Well, I think, as women, we don't have open and transparent conversations about how to make money and grow wealth because we're taught that it's impolite. We're also we're conditioned to be humble and stay small. And I think sometimes we're just as scared of being wildly successful as we are of failing. And so, in a world where it's very easy for us to imagine what we want in finding a partner or getting married or what our children will be like and what kind of parents will be. And it's totally acceptable to speak those desires and to celebrate achieving them. But in contrast, when it comes to our ambition, it's much harder for us to tap into our heart's true desires. Sometimes, like, I'm pulled to negotiate against myself before I even had the chance to be rejected or diminished. And I just don't think it has to be that way. It requires courage and vulnerability, but it's just so worthwhile to give yourself permission to wonder what it would look like if you fully stepped into your power. And if that was realized, what impact would it make in your life? If it's too hard to think about how you personally would benefit from it, think about how your family would benefit, how your clients or customers would benefit. What would that mean for your employees or the changes that you can make in the community? And the answer to those questions are really going to help you tap into your why, the reason that you're willing to take the risk of being an entrepreneur in the first place. And once you can, really tangibly connect with that, and imagine the difference that you can make if your big and bold dreams do come true, how can you not unapologetically pursue them? But it really requires you to be intentional about giving yourself that permission to dream about what you really want and what you truly can be.
I love that, Brittany. Thank you. Thank you so much to all of our panelists for our moderated portion of this session. I'd love to open it up to the audience. Maria?
When you switch from working in an office to being an entrepreneur, we've talked about wearing a lot of hats, but it's not just you're in that role, but you have to learn how to do everything by yourself. Are there any tools that we can use to start adapting and changing our behavior so that we are more productive? Do you have any suggestions?
One thing that helps me is to pay close attention to where am I procrastinating? Because often I might be good at the task that I keep avoiding, but it's something that drains my energy. And I can beat myself up about the fact that I continue to put it off. But I've learned to shift my mindset about it a little bit and really see it as a gift. If I'm consistently procrastinating, that might be something that somebody else is better situated and does have a unique gift at. And that might be where I prioritize what I'm outsourcing.
I think for me, just thinking about who my partners are and people that I can bring into the situation with me that will hold me accountable, that where that vulnerability can take place and we can hold each other accountable. I've had some really awesome people that I've worked with that have been able to do this, executive assistants, that are really good at telling me, do you really need to do this? Who else can do this? So people that will challenge you in the right kind of ways, surrounding yourself with them, and then creating space for those conversations to say what's going well, what's not going well. As Brene Brown would say, rumble with vulnerability and say, and have other people that you trust and that trust you to say to each other, hey, this is what I see. You're getting into a rut here. And how can we help you get out of that rut? But being willing to have those difficult conversations.
Love that. Thanks for the question, Maria. And I would also say, just think of the circle that's surrounding you too. If you have a group of founders that you can also turn and be vulnerable with, and they can share, how they're doing things, I think that might also be helpful, because I think that's a very normal feeling, one that we hear a lot from founders, and it can feel like, why am I not at the place where I see others be, when in reality, like, that's how a lot of us feel, whether you're further ahead or just starting out. I think that's a normal feeling overall. So thank you for being vulnerable here with us. Any other questions from the audience? I know we had some in the chat. Go ahead, Norma.
I remember learning in part of our trainings, there was like 5 people you had to have in your back pocket. It was like a banker, an attorney, an accountant, but I don't remember the rest. Do you guys know like the 5 people you're supposed to have in your back pocket?
A therapist? Just kidding.
And a financial advisor.
Financial advisor. Okay.
I would say therapist, but it's probably also an insurance agent, depending on the insurance needs of your business.
Yeah. Were there any questions from the chat, Jay, that we can jump into?
Yes. Well, Erica actually asked this question, but I thought it was really good. And specifically for Liddell, what would you say for founders that are reluctant to ask for help or meet with bankers because they don't want to feel like they're imposing? And we do see this a lot with women and minority founders who just don't like to ask for help. So is there any advice for that?
Absolutely. And Erica, when I saw that, I wanted to jump up and down because that's one of the best questions I've ever been asked. That's a fantastic question. And you're right, it can feel imposing and intimidating to go sit down with a banker, especially if you're just starting out or if things aren't going well. I think this is where we can take some of the complexity out of this situation. And it all starts with just having a real connection with your banker. And so interview people, meet with a couple of different bankers and see if there's a connection there. If you won't go have, a lunch or a drink or a coffee with your banker and just talk for an hour about nothing, if you don't have that kind of relationship, it may not be a good fit for you. Because when you do have that relationship, there's a mutual trust. And so you can sit down and say, hey, I'm not doing very well, or I don't know how to do this thing. Or sometimes the conversation is, hey, Liddell, I don't know if I'm going to be able to pay my bills this month. Can we talk about it? And we do. And it's so much better to have that conversation up front. And if both parties are honest, we can work our way out of it. I can't tell you how many businesses and companies, especially after COVID, that we had to have those hard conversations with. And yeah, it was rough for 18 months or 2 years, but a lot of those companies are doing well. Some of them have continued to grow, others shrank and are more profitable. And so I think it just starts with having that connection, and it's so much easier to communicate in anything that's going on. And you'll find out, you'll end up becoming friends with a lot of these business partners that you have. It just happens.
Love that. Brittany, Lindsay, would you say that's the same thing for yours? I know, both in the legal space and the financial space, like it can seem pretty intimidating from someone that's not in the space and is maybe going to be vulnerable with someone and like share all that information. So would you feel like, having a relationship with the person on the other side is super important?
Absolutely. I mean, you're looking to build long-term relationships with this kind of the 5 people that I think it was Norma who brought up. Like you want them to be able to collaborate together and have your back from different angles. And you want long-term relationships with them. One, it gets less expensive to work with them over time because they understand your business and they can be proactive with you. But two, if you don't trust them or align with them, you're not going to follow their advice. And so then you're going to be paying for something you don't use. So I'm not going to be the right fit for every client. And honestly, every client is not going to be the right fit for me. It's certainly worthwhile to find the person that you want to connect with long term.
Love it.
I didn't fully answer your question. And Brittany, that was a fantastic answer as well. You mentioned the imposing piece, and I wanted to speak to that because if a banker makes you feel like you're imposing or you're taking their time or they're too busy for you, that's not the right fit. This is our job. This is what we do. And if you have the right banker or a good banker, they're going to treat what we do every single day the same way you treat your business. I own this. I know this isn't all my money that I'm lending out, but I'm intentional about who I work with. I want to make sure that I'm dedicating space and attention to them. And so if that's the vibe that you get, well, and let me back up. If you've already done the homework and you do have that relationship and then you get that vibe, just have a conversation and say, hey, I'm having trouble getting to you. Is this still a good fit? Am I in the right industry? And let them kind of tell you what the result is. But you should never feel like you're imposing to speak to your banker.
Erica, thank you for asking that question. And I can't just sit here and be quiet. So I just want to let everybody know everything Lydell said is dead on. BMO took about 2.5 years to design a program specifically for minority groups. And like Eric identified in the chat, women in business is one of the minority groups that we work with. This is 85% of what I do right now. Those people that are afraid to come talk to a banker, they're the ones that I want to talk to. On top of that, BMO over the last 2.5 years has developed programs specifically for women and minority groups, whether it be Hispanic, African American, LGBTQ, veterans, or Asian in business, that we are actually doing more for them. It was not easy to do with the Fair Lending Act, but BMO actually went and did a 2.5 year process to design programs specifically for these minority groups. It's going to consist of easier to qualify for credit and discounts and rates if you do attain credit with us. And guys, please don't ever be intimidated to talk to a banker, a CPA, or an attorney, because that could be the downfall of your business. If you're just, I don't want to go talk to them, I'm intimidated, I think I'll get by. All of the panelists will tell you it will make life extremely, extremely difficult if you don't. And if you are intimidated to talk to a banker, I will leave my phone number in the chat and you can give me a call anytime. Because that's 85% of what I do is the minority banking. So just had to put my commercial in there.
Yeah, if you can share the link, I know you guys have a link for this specific program, so I would love if I could share it in the chat too. And Lindsay, I'd love if you could close this out with that question in mind about building that relationship, especially in the field that you're in.
Yeah, I mean, we joke about it internally a lot, just that in what we do, we become the therapist a lot of times. Because money is a sensitive issue for people, and they're not going to feel comfortable talking about it unless you've taken the time to build that relationship. And I think I think it's so important. And I also just by nature, I think relationships are what's important to me out in the world. And so, I don't see any relationship as wasted necessarily. And I think spaces like this, like Vest, to have those conversations in an informal way and to help women, especially like get some of that capital of, you know, the understanding and the knowledge of how to best go about being a successful business owner, just in conversation with each other, you know, and what's worked for you, what's not worked, what kind of rooms have you been in and seen situations. I think just having those informal relationships with people are so important too. And then just being honest about, you know, someone may not be able to afford a full blown, you know, intensive tax strategy session and all of this yet. And that's fine. I mean, I don't think you're not imposing on anyone to say, this is where I'm at right now with my business. What do you advise? And then that's a long-term relationship. You know, your business might take off and grow, but however, you know, me or other people I'm sure on the panel can help you now in the stage that you're in now. It's like, well, go do your return on TurboTax, but here's some just quick suggestions on how to do that. And here's the trigger, the indicator when you're going to need more service than that, and you could come back and talk to me again. So, you know, just being honest with each other about that part of it too.
Thank you so much. And thank you for all the panel, everyone that joined today. I think this was such an enlightening session and just a good overall reminder of like, don't be afraid to get in your numbers. Don't be afraid to talk to the experts, and just kind of get those relationships started, right? So I appreciate everyone for joining. I'm going to turn it over to Jay to close us out.
Thank you, Gabby. And I want to end on what Brittany just sent in the chat for those who didn't see it. She said, these are the same systems that have historically been used to empower some and disenfranchise others. The good news is that there are organizations and professionals that want to be the change, so seek them out and don't settle for less than being treated with dignity and respect. I thought that was just really important for all of us to hear. Thank you guys so much for coming, and thank you to our panelists for a great discussion.